And second is set up bookkeeping. And why? I mean, it makes a lot of sense. How on earth are you going to prove that you have a profit motive if you don't have bookkeeping set up to see if you have a profit, right? If you don't know if you have a profit, you're a hobby because you don't care if you're profitable, right? You're trying to prove that you care if you're profitable. How are you going to prove that if you're not even looking at it, right? In other words, you need a business bank account and you need bookkeeping set up. It's just mandatory. It's mandatory if you want to win on this. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, everybody. Nice to be with you. I have been thinking about, I'm recording this the day after tax day, and I know a lot of you experience a lot of pain around the tax deadline in particular. And some of you might be feeling that sort of stung feeling of being told by your accountant that what you think of as a business is not a business, but it's a hobby. And I want to just be here to give you the real story on where that accountant might be wrong and what the actual rule is. And the reason I really put my flag in the ground on this particular issue and tell you that I am right is because, one, I'm a professional artist. I have really sat on the fault line of this issue very personally in my own practice. I have interviewed Susan Kreil, who is the defendant in the U.S. tax court case, Kreil versus Commissioner. I interviewed her extensively, read through her notes, had like multiple sessions with her, read that tax court case. I have just done the background work to really understand this issue, and I'm afraid not every accountant has done that. Most accountants, unless they specifically handle people in businesses that often have losses, aren't looking at the case law here and are not really parsing the nuance. And some of them just are not trained in the law, right? So, it may sound arrogant, but I'm just here to say I have done the work on this issue, and I stake my claim as the authority on the difference between a hobby and a business and the role of losses. Because artists, and I say this episode really is for you, even if you're not an artist, absolutely. And I want you to listen because this is an important issue for everyone. But artists face this issue in a way that is more frequent, more career shifting, and more extreme than everybody else. Now, most businesses have a startup phase where they have losses, and that's normal. And it's actually a tax benefit that is deliberately there in the tax code to give you money when you need it. It's a wonderful thing. But the reason that losses are put under scrutiny under U.S. tax law is because when you have a loss from a legitimate business, you get to subtract that loss, that negative number, off your other taxable income. In other words, losses create a tax shelter for your other income. And this is a wonderful thing that puts generally a big refund into your pocket. And therefore, it's helping you through that period where you have a loss, where generally you need the money, right? So it's a wonderful part of our tax code. But the important thing to know is we don't want people abusing that. This is here to help businesses survive, acts of God like a hurricane or an earthquake that might set your business. You could easily have a loss if you have a business on 6th Avenue in LA and on the 6th Avenue fault. And there's an earthquake and your business falls into a hole, right? You're going to have a loss that year, right? And is that because you're a hobbyist? Hell no. You did not suddenly become a hobbyist because there was an earthquake, right? So I think logic shows us how ridiculous these things are, that sometimes accountants, and frankly, sometimes IRS people say to us. But I just want to be here and talk you through the logic so that you really have a handle on this issue. Whether you're a creative person, an artist who has a lot of losses, which is really the core audience for this, or whether you're any business, a hairdresser, a massage therapist, a yoga practitioner, whoever you are, you might also have losses because you have a bad year because there's some act of God, act of nature, or have a bad year because you're in the startup phase, right? Which is very normal and acceptable. Okay. So I really want to coach you through kind of what the issue is and what makes you a business versus a hobby. All right. So the IRS definition of a business, and I have whole podcast episodes, which I'm happy to link in the show notes, about when your business starts according to the IRS and what makes you a business to the IRS. So go back and listen to those for the background. But the upshot is, to the IRS is not concerned with paperwork, LLCs, formalities, not concerned. That is, the IRS is the tax collector. The IRS has to collect taxes on every business, whether formal or informal in the US, because they collect the taxes. They're not looking to skip out collecting taxes on everybody who does not have an LLC, right? So having an LLC is not a requirement in any way, shape, or form to the IRS for you to be a business, okay? So first and foremost, I want you to understand that to the IRS, all that formal stuff you're worrying about has no effect on being treated as a business to the IRS. The IRS has one criterion. It is profit motive. Okay. Do you have a profit motive? Now, I want to be very clear. Having a profit motive can be present even when you don't have a profit. Okay. So I want you to understand that businesses can and do have losses. We hope they're occasional and not regular, but they can. And if you look at the top of the Schedule C, the title of the Schedule C is Profit or Loss from Business. Okay. So they're not hiding that fact if they put it in the title. All right. If you're not believing me yet, go look at your Schedule C and look at that word loss right in the title. Okay. You don't have to have a profit to be considered a business. Okay. But what you do need is a profit motive. So 2 words, that one phrase, I want you to memorize it. I want you to hold it in your heart. You need a profit motive. Okay. Now, the thing that's important is businesses are allowed to have a loss. And I just explained that a loss is a tax shelter. A loss is a massive tax advantage. And we want to keep them rare. And we do not want hobbyists abusing the tax code and fraudulently filing Schedule Cs and claiming losses. Okay. We don't want people who, oh, I want to go buy a fishing boat. And I know, I'm going to pretend that my fishing hobby, I buy a fancy boat and I'm going to pretend I have a fishing charter business. I'm going to take my friends out. Maybe I ask them for a little bit of money. Maybe, right? And then I put my fishing boat expenses and all the expenses of going out on taking my friends on fishing trips. I put it on a Schedule C. I call it a business. It has a loss over and over and over again, right? That would be a fraudulent Schedule C. That would be breaking the law. We are not doing that. And it's very important. The IRS gets really mad when people try to fake a business and disguise a hobby as a business and take losses, right? Where they don't pay the full tax they actually owe on the rest of their income. Okay. That's what we're trying to prevent with this distinction between a hobby and a business. So the difference between a hobby and a business is what? It's a profit motive. All right. So keep that in your head this whole time. It's a profit motive. So, of course, the easiest way to prove that you have a profit motive is to have a profit. All right. So go out and try to make money. That is your best defense. That is your best protection. It's a wonderful thing. It's also a good reason to do some money mindset work because, if you feel like you're not entitled to a profit, if you don't feel comfortable raising your prices or negotiating, these things can get in your way of having a profit, even when you are running a legitimate business. Okay. That's just a little tip. But with that said, a business exists It doesn't have to be solely, it doesn't have to mean you throw away your vision and your values and your ethics and your artistic integrity, right? But a business has to have a profit motive. A business has to be trying to make money. So you really do need to ask yourself the question, am I trying to make money with this? Okay? And if you don't have a resounding yes, you really might have a come to Jesus moment here where you decide, well, am I going to treat this as a business or a hobby? If it's genuinely a hobby, if you genuinely don't have a profit motive, you should not file a Schedule C. You're not entitled to. You should not be trying to claim losses or taking deductions. Okay. These are privileges given to businesses under US tax code for the public good of growing the US GDP, right? And if you don't have an intention to grow the US GDP writ large, you shouldn't use a Schedule C. You're not entitled to losses, okay? But it can be hard to tell the difference between a hobby and a business when that business has losses, okay? So there are some normal reasons that businesses might have losses. And for that reason, like I said, there's this wonderful, beautiful benefit in the tax code where your loss becomes a tax shelter for other taxable income. So that's a lovely quality. And a normal time for a loss in most businesses is what's called the startup phase. Okay. This is a well understood phenomenon. It takes money to make money. You have to go out and, buy materials, maybe hire staff, maybe have a location that you pay rent on, or maybe you buy. You have to have a place to make work. You have to have a place to do the work, to do the service or make the product. You have to have, marketing and sales to get it sold in whatever kind of format that would look like for your type of business. And you can't do any of those things while the business is operational. Like, you have to build the business before the business itself can make money. This is natural. This is not because you're broken, right? So I see a lot of people have an existential crisis over the fact that they don't immediately have a profit in their business. And it's like they forget, oh, the business has to exist first before it's even capable of making money. And businesses mostly operate like a flywheel. You push on the flywheel hard, and nothing happens at first. And you push and push and push. And eventually it starts developing some momentum to a point where it goes faster and faster and faster. And think about it. Think about the normal way a business operates. You build a brand, you build a website, you start working on your product or service, you make mistakes. It's not perfect. You kind of test it by selling it to your audience, you get feedback, you learn the audience would prefer it this way, not this way, right? So there's a process of iteration and revision. There's a process of seeing what works and seeing what doesn't, and you get better and better. And meanwhile, also you expand your visibility more, you get more people to see your business, to know that you exist. Word of mouth travels. These things take some time. This just does not happen overnight. And business is hard. This is the whole reason there are advantages in the tax code, right? So I want you to understand how normal it is to have expenses up front long before the business is even capable of having a profit. There's, I think art schools do a real disservice to their students, at least they did in my day, where we get kind of indoctrinated in this very anti-money attitude. And we can actually, really shoot ourselves in the foot with this, where we go out into the world thinking that we're broken, even when we're totally normal, because we don't ever get an education in the norms, right? We don't ever get told that most businesses take several years, have several years of losses before they turn profitable. At that, in fact, there is this phenomenon called the break-even point, which is the magical moment in business, a well-understood business concept. It's the magical moment where you go from having more expenses than income to having exactly as many expenses as income. In other words, you break even on the money you're spending, right? So you don't even have a profit yet at the break-even point. You have zero, right? You go from negative to zero. And the idea of break-even point is that every dollar you earn after the break-even point is profit, right? That's the beautiful moment. And we all want you to get you there. You want it. I want it for you. The IRS wants it for you. And that's the whole reason we give you advantages in the tax code, like an ability to take a tax-free loss. Okay. But we don't want you to be a hobby because we're not trying to subsidize people going out and buying a fishing boat and trying to expense that on their tax return. Or, frankly, being a Sunday painter who just kind of enjoys taking the odd figure drawing class and, for pleasure and enjoyment. There's nothing wrong with having a hobby. There's nothing wrong with fishing. There's nothing wrong with Sunday painting. But the tax code isn't there to subsidize those things. Okay. So the important thing is hobbies, they're fine. They're great. Have a hobby, but we're not subsidizing hobbies under the tax code. So if you're running a genuine profit motivated business, you get the benefits. And so it's very critical for you to understand the difference. So let's jump in. What is the difference between a hobby and a business? Knowing that it's a profit motive, right? So how do you prove that you have a profit motive when you've got, 3 years of tax returns with losses on them? Okay. Now, first of all, the kind of easy shorthand method, the one you've probably heard about, the one your accountant might have just brought up with you as you did your tax return recently, is called the hobby loss rule. Now, here's how the hobby loss rule goes. The hobby loss rule says, if you have had a profit in 3 out of the last consecutive tax years, including the current tax year, if you'd have profit in 3 out of those last 5 years, then you are presumed to be in business. Okay. Now, I want to clarify some finer points a lot of accountants don't understand or don't tell you. You are presumed to be a business. When does that presumption kick in? Under audit. In other words, you can be audited under any circumstances. That is actual US tax law, right? That's the check and balance in our system. That's how we check up on people and make sure that no scamming is happening and people are applying tax rules correctly. So the fact is you can be audited whether you have a loss or not, right? You can be audited for anything on your tax return for the last 3 years and 6 years if you have committed any kind of fraud. Okay. So that's the rule. So you can be audited even if you have a profit in your business. You can certainly be audited also if you have a loss in your business. If that happens to you, if you are audited and you've had a profit in 3 of the last 5 consecutive tax years, then the burden of proof is on the IRS. The presumption in that audit is that you are a business and the IRS has to prove you are not. Okay. So of course you still need your books and records and you still have to prove it, but the burden of proof is on the IRS. Now, how does that profit loss, hobby loss rule go when you don't have 3 out of 5 years profit? Here's where a lot of accountants tell you the wrong thing or misunderstand the tax law themselves. It does not mean that you are a hobby, okay? It does not mean that. There's nothing in the law that says that. What the hobby loss rule means, if you don't have a profit in 3 of the last 5 years, so say you have 4 years of losses or 3 years of losses, it's a shift in the burden of proof. Okay. So now what happens is you can be audited and probably your odds of being audited go up. I mean, frankly, that part may be true. And your accountant may be trying to kind of steer you because they don't like that, right? And that's fair. But it doesn't mean you're a hobby. It does not. Okay. Many businesses have more than 2 years of losses and are absolutely legitimate businesses. And I'm not just talking about sole proprietor painters like me. I'm talking about Uber. I'm talking about Anthropic, like, Microsoft, like enormous companies. This is the norm. Of course, they're profitable now. But this is the norm, right? A lot of businesses have a lot of losses. So what it means if you are audited and you don't have 3 out of the last 5 years profit, it means the burden of proof is on you. It means now the presumption is that you are a hobby, but you, under a court of law, are allowed to prove that in fact you are a business. Okay? That's where a lot of accountants tell you the wrong thing and get it wrong. They say you're a hobby now. And the fact is you're not. Your motives did not change. Nothing changed. You are not a hobby. But it does mean if you're audited, you will be presumed to be a hobby and you will have to have super good books and records to prove that you're a business. Okay. Can it be done? Absolutely. Who has done it? Susan Kreil, who I interviewed in the court case Kreil versus Commissioner. Susan Kreil was an artist who had losses for maybe 18 years and successfully proved that she had a profit motive. Another one is Gloria Churchman in Churchman versus Commissioner. These are two tax court cases that I would cite if I were in a hobby loss audit. And you should read the cases. They're totally fascinating and they'll tell you a lot of information that will be useful to you if you're in this position, and go send these cases to your accountant if you want to. But I will give you the cliff notes here, which are the basic thing that the IRS uses to determine whether you have a business or a hobby. In other words, whether you have a profit motive is what's called a 9-factor test. Okay. So this nine-factor test from Treasury Regulation 1.183 to B2, in case you want to cite that. The 9-factor test is how the IRS weighs the factors in your business to see if it's a business or a hobby, to see if you have a profit motive or not. So I want to go through these 9 points with you today and just give you a little bit of guidance, a little bit of explanation about how these might be applied. And what I recommend to you, I will link to this 9-point test for you in the show notes. What I recommend is that you take a look at these 9 points yourself, think through your business and what it looks like and how these factors might apply in your case. Okay. The U.S. Tax Court was very, very clear, and having read the case law about it, having read Susan Kreil's case and the judge's ruling there, they made it very clear that no one factor is the determining factor. This is about a preponderance of evidence and a preponderance of strong versus weak points. Okay. So take that and stick it in your pipe and smoke it to those accountants telling their clients that they're hobbyists when they're not. Okay. So let's go through the 9 points. This is going to really help you if you are in that period of feeling like, oh my gosh, I haven't made a profit. What do I do? All right. So let's just run through the 9 points. I'm going to try to not make this too long. So the first factor, the manner in which the taxpayer carries on the activity. I'm not going to read you the whole law. I'm going to link it in the show notes and you can read it yourself. But essentially, they want to know if you are running your operations in a business-like manner. Okay. And if you are maintaining complete and accurate books and records. Okay. Those are indications that you are running a business and not a hobby. P.S. My program, Money Bootcamp, I teach you how to keep accurate books and records. Like, it is designed for this issue. Okay. I mean, that is, I don't mean to sound self-serving, but this is such a keystone issue for creative people that I designed my course to really shore this up, because I see over and over again creative people who don't have consistent profit getting told they're hobbies when they're not. And I want to help you show to the world that your legitimate profit motive and how it definitely exists, and make sure that you don't make accidental mistakes like not having a business bank account. The 9-point test actually refers to business bank accounts. If you have one, it's a point in your favor for having a business. If you don't, you look like a hobby. Okay. So go out and get yourself a business bank account. That is the first thing you should do. And second is set up bookkeeping. And why? I mean, it makes a lot of sense. How on earth are you going to prove that you have a profit motive if you don't have bookkeeping set up to see if you have a profit, right? If you don't know if you have a profit, you're a hobby because you don't care if you're profitable, right? You're trying to prove that you care if you're profitable. How are you going to prove that if you're not even looking at it, right? In other words, you need a business bank account and you need bookkeeping set up. It's just mandatory. It's mandatory if you want to win on this. Okay. All right. So factor 2, the expertise of the taxpayer or his advisors. Okay. Now, It's okay to hire people who have expertise, right? You can run a business basically as an investor. You can buy a business and you can just hire the people who know how to do the things, right? A marketing person, a product person, a software engineer, right? You can have a legitimate business that way, or you can do it all yourself. Either one is fine, right? The law is agnostic about that. But have you educated yourself in how to run your operations? That's really important. Okay. So you either have to educate yourself. So you would do that by, for example, purchasing a course or a program to teach you how to run a successful business. P.S. That's what my program is. But also, educate yourself in the techniques of the thing you're doing. If you're a massage therapist, are you taking, coursework in, are you getting training in massage therapy, for example, to become a licensed massage therapist? That would be a step towards proving that you have a profit motive, right? If you don't get yourself any education or expertise, how are you going to run the business, right? That looks very dilettante, very hobbyish. Okay. But also, hiring accountants and lawyers is helpful, right? Because those people help you set up the business parts, right? So that is, again, accountants and lawyers tick the box of, experts who can help you have what is a legitimate business, right? But so education kind of counts in this category. Experts you hire count in this category, and educating yourself, right? Factor 3, time and effort expended by the taxpayer in carrying on the activity. All right. So, for example, if you spend 1 hour every other month on this activity, you're a hobbyist, right? Like it doesn't matter what else you have going on. If you're not putting in substantial time to the activity, you're just not going to be able to prove that you actually have an intent to have a business. It's not possible. So it's okay that it's not full time. It doesn't have to be 40 hours a week. Side hustles are fine. Nights and weekends are fine, but it should be regular and it should be consistent and it should be substantial. Okay. All right. Factor 4, expectation that assets used in the activity may appreciate in value. Now, this one is a little tricky, and it generally is referring to things like land and real estate. So it's very common. So, for example, if I were to buy a building in a neighborhood that I knew was going to have a zoning change, right? So I know that in 10, 20 years, once this zoning change takes effect and a different type of use is allowed in this neighborhood, it's going to expand the whatever artistic appeal of the neighborhood and bring shops and street life, and it's going to become fashionable and stylish and people are going to want to move there. And I buy a building and currently it's a kind of a warehouse district and it doesn't have a lot of foot traffic. I might rent out that business in that, the units in that building in the meantime at a loss because I'm just biding my time trying to make some income while I wait for that property, that land to appreciate in value. That would be a legitimate reason to have multiple years of losses, right? Because I expect that the value of the thing I bought to appreciate in value. And ultimately, when I sell it, I will make a profit. Or even when the zoning changes go into effect and buildings and people move to the neighborhood, I might be able to increase the rents to a degree where now I'm profitable. Okay. That would be a good example of this factor. This is often not a factor in the creative world or in the world that you're operating in if your world is not a creative one. But I will give you my own theory here. I do think that artists in particular often make trades of prestige instead of money, right? Or publicity instead of money. I see it all the time. I've done it myself. And ultimately, those are moves in general which are trying to appreciate the value of your artwork. So, artwork at the highest end of the fine arts market, it does hold value and it does appreciate in value. Now, this is a pretty rarefied group of creative people. This is not everyone. And so this does not maybe work in every case. But there are some cases at the upper end of the art world where I can see artists making trades about profitability today for the idea of prestige, which they will then trade on raising the value of those artworks over time. So ultimately, they do sell for a profit. So I do think there is an argument we could make in there, and I would, gladly recommend that. Go ahead and use it if you need it, but I've never tested it. That's just a theory of mine. Okay. Yes, none of this is tax advice. That's my little disclaimer. Okay, factor 5, success of the taxpayer in carrying on other similar or dissimilar activities. So this one, if you're just starting out, this one is not going to help you. But if you have a track record, if you've been around the block, if you've done other stuff in life, this factor could help you, right? So let's say that, I'm trying to think, let's say that I owned a yoga studio and this yoga studio was losing money, was not profitable, and I bought it or became a partner and I managed to turn it around, right? I managed to change the operations of this yoga studio so that it went from unprofitable to profitable. So if now I then go and buy a massage therapy practice, something completely different, then, and it's running at a loss for a couple years, the fact that I had a yoga studio that was losing money that I turned around and turned profitable, that fact that I did that with an unrelated business, that track record could prove my intent in this massage therapy business that I will be able to, I feel because of my track record, will be able to turn this from losses to profit. Okay. That's kind of what this point is about. If you've never had another business before, this one just doesn't do anything for you. It's not going to really weigh in much. Okay. All right. Factor 6, the taxpayer's history of income or losses with respect to the activity. A series of losses during the initial or startup stage of the activity may not necessarily be an indication that the activity is not engaged in for profit. I am actually reading off of the audit technique guide. That sentence was not my words. Okay, so I'm just going to read you from the audit technique guide here. This is a publicly available document that is literally, how an auditor might be looking at you if you were in a hobby loss audit. So listen to this. It says, a series of losses during the initial or startup stage of an activity may not necessarily be an indication that the activity is not engaged in for profit. However, where losses continue to be sustained beyond the period which customarily is necessary to bring the operation to profitable status, note that they're saying there's a startup period and it's normal to have losses there. See, if you're reading between the lines, you heard that? Okay. Such continued losses, if not explainable as due to customary business risks or reverses, may be indicative that the activity is not being engaged in for profit. If losses are sustained because of unforeseen or fortuitous circumstances which are beyond the control of the taxpayer, such as drought, disease, fire, theft, weather damages, other involuntary conversions, or depressed market conditions, such losses would not be an indication that the activity is not engaged in for profit. A series of years in which net income was realized would, of course, be strong evidence that the activity is engaged in for profit. Okay? Those are the IRS's words right there. So it's really important to understand that factors beyond your control, disease, fire, theft, market conditions, these can cause a loss without you changing your motives, right? The fact that, I don't know, inflation goes high, does that change your motivation in your business? No. All right. So no two cases are identical, and your unique case is going to be, tested on its own merit. But it's really important to understand. It's really important to understand that the IRS will take your history into account. In general, they're not going to look at 1 year. They're going to look at multiple years. And I will say that you can use this in your favor, right? It's possible that you were audited and they're only looking at the past 3 years, but for several years before the most recent 3 years, you had a profit. Let's say you had a profit for 7 years in a row, and then loss, and you're being audited over the loss years. I would go ahead and show them the records for the 7 years you had a profit, because that's going to count in your favor here. Okay. Factor 7, very related to this, amount of occasional profits that are earned. Okay. So I want you to understand that the size of the loss or the size of the profit is a factor. Okay. Now, of course, in the hobby loss rule, it's not. They just say profit. So $20 a profit is still a profit, according, to factor into the hobby loss rule of 3 out of 5 years of profit. However, in the 9-point test, factor 7 is going to take account of how big or small the losses and gains are. Now, if you have a series of small losses and then one gigantic year of profit, that gigantic year of profit will count in your favor. It will become clear that if that profit could cover your expenses for all those prior years, it could be understandable why you would set up a business that way. So that large profit will help you. Okay. Now, the corollary is a little tricky, right? If you have really large losses and then occasional very small profit, that will count against you. That's not a good look. All right. What we're looking for is, maybe the way that your business operates is you get large but occasional payouts. That's fine. But if what it is large losses consistently and only the tiniest profit, that just doesn't look the same. These two situations are treated quite differently. Okay. All right. Factor 8, the financial status of the taxpayer. I do want to tell you that the Kreil case, and I recommend that you read the interview I did with Susan Kreil. The Susan Kreil case actually definitively proved, and the U.S. court judge made clear that the argument the IRS was trying to make with her case was not valid. So let me put some nuance onto factor 8, financial status of the taxpayer. If you depend on income from other sources, it can cast a poor light on the hobby or business that you are operating, right? So if I have a day job and I support myself by my day job, then the practice that I'm running, hobby or business, it can look more like a hobby for the simple fact that I don't rely on that income. Okay. Now, the IRS actually tried to use Susan Kreil as a test case for this point and say that the fact that she was a professor at Hunter College made her art practice de facto just not a business, made it a hobby. And the judge was very clear in saying that that cannot be true, that there are many, take the example of a law professor. There are many, in fact, it's a common practice that people will have a faculty position teaching law, right? And also have a legal practice. And the fact that they teach in a school does nothing. It makes no comment on the profitability of the law practice, right? You would never say somebody's running a law practice that is a hobby, and it's a hobby only because they teach, right? It's just not related. Okay. So the U.S. tax court in Kreil versus Commissioner specifically invalidated that point. However, people will still try to rely on it. Okay. What I will say to you as a way to use this point in your favor is that if you do not rely on the income from the activity, it's not going to be a good point for you, right? However, if you do rely on the income from the activity, it is a point in your favor, right? If you're living off what you make from this operation, it's likely to be a business, right? That fact that you have everything at risk is going to count in your favor. All right. Now, factor 9, this one's a tough one for some of us, but factor 9 is elements of personal pleasure or recreation. Okay. Now, to be clear, you can love what you do. That's fine. Right. But the more, quote unquote, fun what you're doing is, the more it might look like a hobby. And the more you have to be careful to be sure that you have the other elements in place that you need. Okay. business bank account, advisors, years of large profit, things like that. You need to be hitting the other factors in the test. Frankly, artists, actors, people who breed horses, people who charter fishing boats, these things look like hobbies. They look fun and people do them for fun. And so if you are trying to make a business out of something that people do for fun, you need to be very careful to shore up your books and records and behave in a business-like manner. And of course, make profit, right? That's the important part. Okay. It doesn't mean, just ask Taylor Swift if you can make a living doing what you love. Certainly you can. And there's nothing that makes you a hobbyist just because you love what you do, but you want to be very careful. If you love what you do, it's possible to do it without any motive towards profit, in which case you really are running a hobby. Okay. So just keep that in mind. So just to summarize, profit motive is what makes you a business. There is a 9-point test that the IRS uses, and it's in the audit technique manual for the IRS, to determine whether you have a profit motive or not. Now, a lot of people want a black and white test to say, this is a hobby, this is a business. And a lot of accountants, either mistakenly, because they don't understand the tax law, they haven't read the tax cases, or I don't know, because they're being jerks, maybe, try to teach you that the hobby loss rule is a black and white rule where, if you don't have 3 years of profit out of 5, you're automatically a hobby. And that's not true. The fact is, judging your profit motive is based on a 9-factor test. And these elements, no one factor outweighs the others. It's a preponderance of evidence. Ultimately, this is where we see that tax law is law. It comes down to judgment. Okay. So you want to look through these 9 points yourself. You want to compare them to your business and make sure that each of these factors speaks to the fact that you have a profit motive. Because if you don't have a profit motive, you really do have a hobby. All right. So there may be things you can strengthen. And I think this 9-factor test is a really good thing. It's a really good exercise for all of us to look at it from time to time and say, okay, do I have the basics? Do I operate in a business-like manner? Do I have a separate business account? Do I do bookkeeping, right? If you don't do bookkeeping, come on, you're a hobbyist, right? Because how could you possibly say I care about my profit when I don't even track my profit, right? So there are some basic things you can do to get your business more shored up and safer and less at risk if you're in the position of being in a hobby loss audit. All right. So take a look at the show notes. There's lots of resources in there for you. And if you have found this episode helpful, I want you to know that, of course, because this is such a major issue, especially for people in the fine arts specifically, I really designed my program, Money Bootcamp, to tackle this issue because the people I went to art school with, the people in my community, we really are running businesses, but we're often mistaken for hobbyists because what we do, somebody who doesn't know what a real artist looks like can often mistake us for a hobbyist. And that's why I really wanted to dig in this episode to this issue. And it's why I built a program that really helps you shore up all of these 9 points. All right. So if you're interested in Money Bootcamp, I'll put a link to that in the show notes for you. But if this episode just has been helpful for you, if you have a friend who's been struggling with the issue of losses or been told by an accountant that they were a hobby when they feel absolutely certain they are not, please share this episode. I think this episode is going to really help people feel better about what they're doing and realize there are genuine ways to prove that you're a business and not a hobby. All right. Hope you enjoyed, and I'll see you on the next one. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.